What is up, guys? Today we're going to go in depth on the CPI trades that I took today and market review, and we're going to look at how you could have traded today's market order flow and range using ICT concepts. Okay, so let's get into it. So here we had this huge down move from the CPI news, and we had this opening range gap, right? So if you toggle the electronic hours to regular trading hours, you're going to get this gap from here to the 9:30 opening price here. So here we have the 9:30 opening price level marked up, and as you all know, we trade between 10 to 11. So if we look at price here, we opened up, traded higher, and we displaced heavily here to the downside, taking a little bit of this internal liquidity here as we're running up higher. So this probably enticed some traders to go short, especially chasing the CPI news. But if we notice here, we started to trade above the 9:30 opening. So as we came down, we started to trade above. If we look at price here, we can see, if we move some of this out of the way, price traded heavily here. We created this bearish fair value gap in here, right? So price trades into it at 9:49. We trade away. Then again, we open here and drive up into this bearish fair value gap, right? And then we continue to trade higher at 9:51, and we close above this gap, and we close above this wick. Okay, so once you start seeing this signature, this is your change in the state of delivery. We leave it, this area, we leave behind this bullish gap in here. Price then drives higher, making new highs. We pull back into this level, okay? Notice how the candles and the bodies are respecting this fair value gap, right? Inside this 10 o'clock hourly open. And we dig a little bit deeper, but that's because we're digging into about 50% of this order block's wick here. Okay. Now it can be permissible to dig into this whole range of this candle body and wick here, right? But notice how we stay above 50% of this whole candle wick and body in here. Okay. So even as we dig into here at 10:15, we're still respecting this order block. And we're anticipating price to come up and fill at least 50% of this regular trading hours gap. But if we notice, we fail to do so. But let's pull up the entry here on this first one here. So we can see that 1 minute gap. The order block is delineated there. And we're targeting 50% of that regular trading hours gap. Now I'm just noting some time signatures and how I want to see price delivered as I'm reading the price action in the candles and how we're respecting PD arrays or disrespecting other certain PD arrays as we're trading live here. So we dug into this order block a couple times, so I don't want it to come back down into here, and I don't want it to come back down into this 1 minute gap. So I'm allowing 50% of the gap to be traded here, but I want to see this new fair value gap, bullish, be respected, and this order block be respected. And then I'm noting 1030 when we typically will get another run on the market. Market will start to spool. So now I've moved my stop up even more, right? And I want to see us trade up here before 1050, which is the start of that next macro time. So as we're trading higher now, I start to pull my stop loss in profit here, because now I'm trading with time. I'm looking for time to push this higher. And if I don't get that, then we're going to be stopped out in profit, which is exactly what happens here. We end up trailing up higher, and it comes back and takes us out here, because I wanted to see us push before that 1050 macro, and it takes us out here in profit. Okay. So once it does that, I'm noticing, right, the next macro that begins is that 1050 to 1110. Now, we've taken some relatively equal highs in here as we're building up liquidity. So buy side liquidity here is swept, and we're failing to get up to this 50% of this regular trading hours gap, the RTH gap. So I'm noticing that NQ is heavy here, and if we're following order flow, right, as we have this gap in here, we should respect this down close candle that dipped into this bullish fair value gap and then continue higher, but we don't. We close with a candle body below, so we have a change in the state of delivery, pretty much immediate rebalance in here, and then we trade even lower. And if we notice here on the left side of the trading candles, we have this other bullish fair value gap, gets traded through, disrespected, and then used as an inversion fair value gap, right? So now I'm anticipating these lows that got left behind, and all of this here being a low resistance liquidity run here, right? We have the 930 open, and we also have low hanging fruit here underneath this order block, right? So if you look underneath this order block, relatively equal lows here. So this would be like a first target. Okay, because if we measure this low to the high, these lows are just above equilibrium, and we know price will want to come back to equilibrium, right? So as we're starting to disrespect this bullish fair value gap and using it as an inversion here, you get an immediate rebalance right here. Look how precise that is, right? So you get an immediate rebalance right there. And then we trade aggressively towards this target here. And we'll go into the price action on this one. And you can see live market data here at in the top is green, right? So everything I was just talking about, liquidity built up, right? We're using this as an inversion here. We also note we have this breaker in here, right? So if we look, we have this high, low, higher high, and we close below it. So we have 3 PD rays in here, right? We have a small gap in here that we wick in. We have an inversion, and we have a breaker right underneath an immediate rebalance. Tons of signatures showing us lower prices. Again, I'm using time, right? ICT talks about time, then price. And everything on the left side of the chart should be used as resistance. I want to see speed and velocity through the lows, bearish order flow respected, all bearish PD rays being respected to continue order flow. And I'm delineating 930 opening price because I want us to come under 930 opening price and use it as support, right? And attack those lows that we left. But we come back up. Risk is removed. Trailed in profit here. Now I want to see speed through these lows, and we're coming up towards the end of that macro, which is like 1050 to 1110, or you can use 1045 to 1115. But if we notice price, I'll speed this up here. Price fails to get below this 930 opening and just messes around here. And then finally, towards the end of the macro, comes up and stops us out in profit here. But if we notice, we had this nice second stage distribution where I have it noted as the silver bullet gap because we have this bearish gap and this inversion gap, and I ended up re-entering here and taking it back down for a small trade because we've seen this gap being respected. So notice how I don't enter right off of the gap. I wanted to see it respected. So we reject it again. And then on the second bearish candle, as we're driving lower, is when I enter. We come back up and we create a SIBI here. And that's why I took this entry here. And again, I wanted to see us come down and trade through these lows here. But trail stops again on this one. Risk is removed, and we got stopped out on this one, the next macro. Okay. So there's another trade I took in the afternoon. I took some buys, but that one was for the Discord. So they got that breakdown in there. And if you're interested, you can now get the Discord. Come trade with us. You can get it for as little as $10 a week. Okay, so or you can do monthly or for the year or just pay a one-time. Totally up to you. Come in, learn these trading signatures in depth. We have tons and tons of knowledge in here. We trade live. Everyone's passing their prop firms in here. So intraday ICT analysis, boot camps, daily reviews, weekly outlook, execution videos, trade examples, all these chat rooms, profit and losses, educational content, all the way down to psychology, backtesting, and different ICT strategies, gems, advanced and beginner. So tons and tons of knowledge in here. We have over almost 300 members in here. So come have fun with us. Join like-minded people, real traders. We only want people that are really serious about trading and enjoy it and really want to elevate their trading skills. So come in and join us for, $10. You can get in, try it for a week, see if you like it. If not, you can cancel. Don't forget to hit that like, comment, and subscribe below. And I will catch you guys later, and trade safe.